Welcome to our channel, where we dive into the world of finance and explore the latest news and trends that are shaping the markets. Today, we've got a lot to cover, from the latest developments in the U.S. equity indexes to the potential risks and opportunities in the tech and healthcare sectors. But before we get started, let's kick things off with a hook that's sure to grab your attention. What if I told you that the Strait of Hormuz, a critical waterway in the Middle East, has become a focal point for Wall Street analysts and investors? That's right. The same region that's been at the center of geopolitical tensions for decades is now being scrutinized by financial experts, and the implications are huge. Let's start with the big picture. The U.S. equity indexes have been on the rise, driven in part by the latest developments in the Trump administration's efforts to secure a deal with Iran. The news that Trump is getting tough on Iran has sent crude oil prices higher, which in turn has boosted the energy sector and contributed to the overall rally in the markets. But what does this mean for investors, and how can you position yourself to take advantage of this trend? Well, for starters, it's worth noting that the energy sector has been a laggard in recent years, so any positive news is likely to be met with enthusiasm from investors. However, it's also important to keep in mind that the situation in the Middle East is highly unpredictable, and any escalation in tensions could quickly send the markets into a tailspin. Moving on to some specific stocks, let's take a look at ULTA. This beauty retailer has been a favorite among investors in recent years, and for good reason. With a strong track record of growth and a loyal customer base, ULTA has been able to weather the storms of the retail sector and come out on top. But what are the two reasons to like ULTA, and what's the one reason to stay skeptical? Well, on the positive side, ULTA has a proven business model that's focused on offering a wide range of products and services to its customers. This has allowed the company to build a loyal following and drive revenue growth. Additionally, ULTA has been investing heavily in its e-commerce platform, which has helped to drive online sales and expand the company's reach. On the other hand, one reason to stay skeptical of ULTA is the intense competition in the beauty retail space. With new entrants like Sephora and MAC Cosmetics, the market is getting increasingly crowded, and ULTA will need to continue to innovate and adapt in order to stay ahead of the curve. Nevertheless, with its strong brand and loyal customer base, ULTA is well-positioned to continue growing and thriving in the years to come. Next up, let's take a look at HUBB. This company has been flying under the radar in recent years, but with its explosive upside potential, it's definitely worth taking a closer look. So what are the three reasons to like HUBB? Firstly, the company has a strong track record of innovation, with a focus on developing new products and services that meet the evolving needs of its customers. Secondly, HUBB has a solid financial foundation, with a strong balance sheet and a history of generating consistent profits. And thirdly, the company has a talented management team that's dedicated to driving growth and expansion. But what about the risks? As with any investment, there are always potential downsides to consider. In the case of HUBB, one risk is the company's reliance on a limited number of customers. If any of these customers were to leave or reduce their business, it could have a significant impact on Hub's revenue and profits. However, with its diversified product offerings and strong customer relationships, HUBB is well-positioned to mitigate these risks and continue growing in the years to come. Moving on to the healthcare sector, let's take a look at PFE. This pharmaceutical giant has been a staple of the sector for decades, but with the changing landscape of healthcare, it's facing new challenges and opportunities. So what are the two reasons to watch PFE, and what's the one reason to stay cautious? Well, on the positive side, PFE has a strong pipeline of new products and treatments, including several promising cancer therapies. Additionally, the company has been investing heavily in its research and development capabilities, which should help drive innovation and growth in the years to come. On the other hand, one reason to stay cautious of PFE is the intense regulatory scrutiny that the company is facing. With the ongoing debate over drug pricing and access, PFE and other pharmaceutical companies are under pressure to demonstrate the value of their products and services. While PFE has a strong track record of delivering innovative treatments and therapies, the regulatory environment is always subject to change, and investors will need to stay vigilant in order to navigate these risks. Next up, let's take a look at NVIDIA, the tech giant that's been making waves in the world of artificial intelligence and graphics processing. However, according to one analyst, NVIDIA might have a memory problem, and it's not just about the company's products. The analyst is warning that NVIDIA's reliance on external memory suppliers could become a major risk factor, particularly if the company is unable to secure a stable supply of high-quality memory components. So, what does this mean for investors, and how can you position yourself to take advantage of this trend? Well, for starters, it's worth noting that NVIDIA is a highly innovative company with a strong track record of delivering cutting-edge products and technologies. However, the analyst's warning highlights the importance of diversification and risk management, particularly in the tech sector where supply chain disruptions can have a significant impact on a company's bottom line. In other news, an offbeat Wall Street research firm has been making headlines with its unconventional approach to research and analysis. The firm recently sent an analyst to the Strait of Hormuz, where they learned some valuable insights about the region and its importance to global trade. So, what did they learn, and how can investors apply these insights to their own investment strategies? Well, according to the analyst, the Strait of Hormuz is a critical waterway that's essential to the global economy. With a significant portion of the world's oil passing through the strait, any disruption to trade in the region could have far-reaching consequences for the global economy. Finally, let's take a look at some of the latest news from the world of finance. JP Morgan CEO Jamie Dimon has released his annual letter to shareholders, in which he cites risks in geopolitics, AI, and private markets. Dimon warns that these risks have the potential to disrupt the global economy and impact investor returns. So, what can investors do to navigate these risks and position themselves for success? Well, for starters, it's worth noting that Dimon is a highly respected voice in the world of finance, and his warnings should be taken seriously. By staying informed, diversifying your portfolio, and maintaining a long-term perspective, you can reduce your risk and increase your potential for returns. In related news, Blue Owl has capped private credit fund redemptions at 5% after steep request levels. This move highlights the challenges that private credit funds are facing in the current market environment and the need for investors to be cautious and disciplined in their investment strategies. So, what does this mean for investors, and how can you position yourself to take advantage of this trend? Well, for starters, it's worth noting that private credit funds can be a valuable addition to a diversified portfolio, offering investors the potential for higher returns and lower correlation with traditional assets. However, it's also important to be aware of the risks and challenges that these funds face and to approach them with a careful and disciplined investment strategy. In conclusion, the world of finance is always changing, and investors need to stay informed and adaptable in order to succeed. From the latest developments in the U.S. equity indexes to the potential risks and opportunities in the tech and healthcare sectors, there's always something new to learn and discover. So, be sure to like and subscribe to our channel for more finance news and analysis. And don't forget to hit the notification bell to stay up to date on all our latest videos. Thanks for watching, and we'll see you in the next video. As we wrap up today's video, we want to leave you with some key takeaways and action items to consider. Whether you're a seasoned investor or just starting out, it's always important to stay informed and educated about the markets and the economy. By following the news and trends that we've covered today, you can gain a deeper understanding of the forces that are shaping the world of finance and make more informed decisions about your investments. We also want to encourage you to do your own research and analysis, and to consider multiple perspectives and viewpoints before making any investment decisions. This can help you to identify potential risks and opportunities and to develop a more nuanced and informed investment strategy. Finally, we want to remind you that investing is a long-term game, and that it's always important to maintain a disciplined and patient approach. By avoiding emotional decisions and staying focused on your long-term goals, you can reduce your risk and increase your potential for returns. Thanks again for watching, and we look forward to seeing you in the next video. Don't forget to like and subscribe to our channel, and hit the notification bell to stay up to date on all our latest content. We appreciate your support, and we're always here to help you navigate the world of finance. So what are you waiting for? Start building your knowledge and skills today, and get ready to take your investments to the next level. With the right information, tools, and strategies, you can achieve your financial goals and secure a brighter future for yourself and your loved ones. Thanks again for watching, and we'll see you in the next video. Like and subscribe to our channel for more finance news and analysis, And don't forget to hit the notification bell to stay up to date on all our latest videos.